Welcome back. Time for the word on Wall Street. Top investors watching your money this week. Joining me right now is Rosecliff founder, managing partner Mike Murphy, Walser Wealth Management president Rebecca Walser, and global fixed income portfolio manager for Brandywine Global, Jack McIntyre. Great to see everybody this morning. Thank you for being here. First up, let's look at markets up 111 on futures this morning after stocks finished in the green yesterday. Again, second straight session. Stimulus hopes is propelling markets with Democratic and White House officials resuming negotiations. But of course, the sides reportedly no closer to an agreement. House Speaker Nancy Pelosi says there would be no aid solely for airlines unless it's part of a broader agreement, which includes all of the things in her package. Rebecca, let's start with you. Your take on markets and stimulus. How important is a deal to get done to keep this market propelled?
It is, Maria. I think that investors are saying that it might not happen before the election, but it will happen. And so that's why you're seeing us return to, futures looking up. But honestly, these airlines just do not have the capacity to play these political games. I mean, I'm concerned about their cash burn. TSA reported last month that the travelers are down 60%. And so we know our airlines cannot withstand, that level indefinitely this long. I mean, we had the $25 billion in March, but we're looking for more money because these airlines have a cash burn with fixed labor costs and infrastructure costs that are just too insurmountable without this government stimulus when we're not getting people back into the skies. And so, Maria, if we don't get it, you can look for this sector to be very badly hit.
Yeah, and this is one of those industries that the country needs. So it is deemed essential. And yet there's no urgency here on the part of Speaker Pelosi. Let's talk about deals, because we got a lot of them recently. Morgan Stanley making some big moves yesterday, acquiring Eaton Vance, announcing the acquisition for $7 billion just days after completing its deal to acquire E-Trade Financial Corp. This signals a shift into safer areas of business for Morgan, with money management, wealth management, offering steady fees, little capital to run on. Mike, your reaction to what Morgan is doing. What is Morgan trying to become, and do you think we'll see more deals in financial services?
Good morning, Maria. Absolutely, we'll see more deals in financial services and in finance in general, in fintech, in these large banks, not only buying asset managers like Eaton Vance here from Morgan Stanley, and before that E-Trade, but really we're going to see more of the big banks buying growth by coming into the private markets and buying high growth technology-driven financial companies. Like you see a company like Robinhood that now has a $13 billion valuation. And the big banks in general, since the financial crisis, Maria, they haven't really had any true growth. So now when you ask what's Morgan Stanley trying to do, they're trying to figure out how to get not only a constant earnings stream, but really high growth. Morgan Stanley is still trading way below where it was before the financial crisis. Citibank is nowhere near where it was. JP Morgan is trading down 30% from recent highs. So if you're looking to buy growth in this market, you look at it. People are investing in tech, the big tech companies. So the big banks now, and Morgan Stanley, Goldman Sachs, JP Morgan, Citibank, they all need to go out and buy growth. And that's what you're seeing here with Eaton Vance. And this is only the beginning. There's a lot more acquisitions coming.
So you think the growth in financial services is in technology? Any other areas of growth that you're indicating, that you're predicting?
Yeah, so, aside from straight tech, things that are changing our lives on a daily basis, companies like the next Uber coming out, really, fintech is an area we focus on a lot because there's a lot of wealth in this country. There's going to be a massive passage of wealth as baby boomers pass away and pass that money on to their heirs. Everybody wants to get a piece of that pie. And then you have the Gen Z, the younger generation out there that didn't trust the market. So people are trying to figure out, how do we get to the 20-year-old people, get their money now as a bank would have back when you and I were in our 20s, and how do we get their money now and continue to manage their money going forward? So where's the growth going to be? And that's in the private sector. The big banks are just too large to get there, so they're going to get there through acquisitions. But fintech is a place to keep an eye on. There's going to be a lot of companies coming.
I like it. I'm going to be watching that. Meanwhile, we are on the doorstep of earnings season for the third quarter. The third quarter reports are going to be coming out beginning next week with the big banks like JP Morgan, Goldman, Bank of America. The Wall Street banks on track for a record year of revenue from trading U.S.-backed mortgage securities. We're looking at that part of the business. Jack, where will the growth be when we get these earnings next week? And what are you expecting largely from the earnings season?
So I think, right, the big banks, they've done well from a trading standpoint, but sometimes that's not repeatable. We've had such a unique environment this year. I would struggle to extrapolate that going forward. And, earnings are going to come from that sector of the economy that's done well. More manufacturing, things related to housing, services are still going to struggle until we get resolution on the pandemic.
That makes a lot of sense. Yeah, of course. They need the foot traffic in order to see revenue moves. Great to see everybody this morning. Thanks very much for the word on Wall Street. Mike Murphy, Rebecca Walser, and Jack McIntyre. Quick.